bar. Its low is below the bar before it. It doesn't matter if it's above, as long as it's at or above. It doesn't matter if this is below, as long as it's at the low or below. Then this is an outside bar. It's a reversal. In this particular case, we went down and we went up. Do you buy as it's going above the top of the bear bar? In general, I do not. If this was a good buy signal bar and we went outside of it and above its high, then I would buy as this bar goes above the high of this bar. But in general, I'm not looking to buy as the market goes outside up. The context has to be good, and the prior bar has to be a good reason to buy. This is not a good reason to buy. I prefer to buy above bull bars. If I'm buying and I just look at these two bars, where am I going to buy? Am I going to buy on a stop above this bear bar? No. I might buy on a stop above the bull bar, because in general, if I'm buying with stops, I want to buy above bull bars. Here we have an outside bar. Its low is below the low of the prior bar. Its high is above the high of the prior bar. It has a fairly big tail on top. We're getting a bull reversal here. We have a slightly lower low reversal. And then we broke strongly to the upside. And this is a pullback. We have a micro double bottom bull flag. Not a very good looking buy signal bar here. Also a big tail on top closing at this high instead of closing above it. And this bar did not close on its high. Not a particularly strong buy signal. However, would bulls buy on a stop above the high of the bar? They might. This reversal up is strong enough so that traders think it will go higher. However, because this bar is not a good signal bar, this bar closed at and not above that bar. This bar did not close on its high. The rally is probably not going to go very far. We have a double top and we have a pullback from the test. We have a micro double bottom, all good. The close is above the high of two bars, which is better than simply being above the high of one bar, but it did not close above the top of the bull leg, and it did not close above the double top, so it's not especially strong. Good follow through, the bull bar closing on its high, well above the prior high, well above the double top. But at this point, the market is clearly always in long. Odds are we'll get at least a little bit more up. Bears are hoping that it's a second leg trap, leg one, pullback, leg two. But here we have two good bull bars, the second one even better. Good sized bull body closing on its high, closing up the highs of the past 20 bars. More likely, we're going to go higher. At a minimum, traders are looking for some kind of a measured move up, maybe based upon the open of this bar to the close of that bar, maybe based upon the low of this bar to the high of that bar, right here. And ultimately, the market worked up. Tight trading range, it's a warning that the rally might not be strong, but the odds are we're going higher. The same right here, another tight trading range, but no clear top. And the pullback here, while it fell below this low, this is a minor higher low, it did not fall below this low, a major higher low that led to a strong breakout. This higher low did not lead to a strong breakout, so it's minor, and probably this rally is part of a trading range and not a resumption of the bull trend. This is a strong bull breakout to a new high. This is probably the start of the bull trend resuming up, and traders do not want to see the market fall below the bottom of a major higher low, because then their premise of a resumption of a bull trend is no longer valid. The market then is probably either in a trading range or even a bear trend. Trading range, you could say bull trend, bull flag, bull breakout, and went to a new high. And as soon as it got to the new high, what happened? A huge outside bar. The high of the bar is above the high of the prior bar, and the close of the bar, well, the low of the bar is below the low of the prior bar. But more than that, the bar closed below the low of the prior bar. It closed below the low of this higher low. It closed below the low of the past maybe 30 bars or so. So this is a very strong bear bar, and the market probably is always in short. We went up, and then we went down. So this is a large reversal, and this one bar is enough to make traders believe the market will probably go at least a little bit lower. How much lower? Well, I'm always thinking in terms of measured moves. Maybe a measured move based upon the height of the trading range. Maybe a measured move based upon this double top. Who's selling here? The bulls are clearly giving up. So the bulls who bought above there or who bought anywhere in here, once it starts to fall, they're giving up. They're selling. The bears know that, and the bears are selling as well. This happens quickly. Remember, at one point, this was a bull bar, and traders are thinking it's going up, and then immediately it reversed down. So you have to be thinking about this so that you can act quickly. You could sell on a stop below the neckline of the double top, this high, that high. This is the neckline. And it's a bigger double top, this high, that high, and this is the neckline. This is the lowest bar between the double tops. That is also a sell signal. A lot of traders find it very hard to sell when they're thinking market's going up, 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 and then it reverses so quickly. If you're not able to sell as it's forming, then wait. You could always sell the close of the bar, or you could wait a bar or two for a bear flag. And here we have a pair of doji bars, a weak attempt to reverse the bear breakout. More likely a bear flag than a bull reversal. So traders will sell on the stop below that, below the prior bar. They'll sell here. Now we have a double top and a bear trend, so a double top bear flag, a good looking sell signal bar. They'll sell here. Here we have a triangle, 3 pushes up, 1, and then 2, and then a third bull bar, 3. That's another sell signal. In this video, I talked about